Hey traders, welcome to Charts and White Tea this morning. I drank my coffee already. Promised myself one giant vat of coffee per morning. I've got a blueberry and pomegranate white tea. Actually, not bad. No, I take that back. It doesn't taste great, but apparently it's really good for me. And that is what we're rocking today. Why low on the caffeine? We've got our bonus session coming up, 2 p.m. Little bit of time left. You got about 5 hours if you haven't joined us already over at Sector Secrets Mastery, happening in 4 hours and 59 seconds. That is when I'm going to be caffeinating up for the afternoon. Very excited for that later on today, 2 p.m. All right. And what are we going to be talking about? A lot of folks have asked, Ron, we're going to be talking about building a rock solid watch list, going through the process, 2 hours of that. Very excited. All right, so let's get to it. As always, this show is about your questions. We do not have any major hot zones coming up today, so we kind of have an open morning. It's been a while since we're not peppered with FOMC speak. However, we are winding down to end of quarter shenanigans. There's shenanigans at the end of the day. People were shuffling based on, what they saw during the day, getting ready for the next. There's at the end of the week, right? I have to remind traders, Friday hates traders. The end of something, the end of a day, week, month, quarter, year is just rife with shenanigans, kind of reshuffling and so forth. Quarterly shenanigans, they're intense. If we're going to see really the continuation of this rally, most especially in tech, I think that we're going to learn a lot about what this market's really intending. When I say this market, where is the flow? What is the real intention as we wind down this month of March? All right, so as always, let's get to your questions. I see a lot of them already stacked up. So without any further ado, let's do it. Hey there, Josh. Good morning. Are we completing a head and shoulders pattern on the weekly chart of the SPY? Well, let's go take a look. So, Josh, I'm going to be straight up with you. I don't pay attention to head and shoulders because for me, a head and shoulders is a neckline, and a neckline is either support, resistance, or a trend line. So what I try to do is care less about heads and shoulders and elbows and knees. And I ask myself, where the heck is that neckline? Where is that resistance? Where is that support? And then furthermore, do we have a volume ledge coinciding with it? So I don't know about the head and shoulders. I really never use that pattern in my trading on any regular basis. But here's what's interesting. If you look for support, resistance, the underlying market trend, and volume ledges, funny enough, you'll come up with a very similar level. So on the weekly chart, let's go to the weekly of the S&P, SPY. It looks like a Darvis level at 457-ish. At 457-ish. You know what I'd say it's really popping out at me on the weekly is this point of control, 435, call it 434.5. And I would say these tops right along 458, 457. You see those candles? I'm with you there. We've got a high on the 18th of 459.96, so call it 460. We've got a high on the 31st of 458.12, and we've got a high on the 7th of 457.88. So I'd say you're right there. That's going to be near-term resistance. Yes, I completely agree. And remember, we are in, let me get my drawing tools here. We are in COPP, my friend. The underlying market environment is yellow. Let me show you where we recognize that. There's one of two ways that you can see the structure of the trend. You don't need anything complicated to do it. Most of you will have the two indicators that I use right down here, right? These two are called the JT trade flags right there. And these two, this is known as the JT multi. So the trade flags show the very right edge of the multi, and the multi gives you the history of these momentum and trend shifts. So we have a neutral market, which means we've got an oversold level up down here, likely an overbought level down here. We're just going to find ourselves sort of operating in this, area until we get out of the range, until the sentiment organizes into momentum, until that momentum continues and yields a trend. Also notice some interesting volume ledges, 469 and 418.5. So there are some price levels to think about. Gang, if we break down a chart, and I want to make sure there's really three stages of analysis, if you think about it. And this is to put pressure on those of us on this side of the mic. One stage of analysis is sort of that superficial conversation about, well, this is bullish and bearish, and this is what my secret squiggles are saying. And that's helpful. It's sort of surface level. The next level down is, hey, what are the price levels that mean something to us? What's support? What's resistance? And I hope that's mostly what we do in Charts and Coffee, or really any of the videos that we get to communicate in. The third layer, this is the trade, this is the trigger, this is the target, this is the stop, right? This is the catalyst, those five things. So that's really when we get down to the granular level of, hey, this is what we want to do. That's what I do for our mastery members. That's what I do in the futures room. But I really want to make sure we're at least getting to that second level, which is these are the levels that matter. And here's why they matter. So Josh, that's what I see in that SPY. So thanks for the question. Now, as far as head and shoulders, I don't know, my friend, but I love that you're looking at the Darvis, and then we pile on a couple of other tools, volume, volatility, the underlying market structure. We're in good shape. James, how you doing, my friend? Gold, right. We've had that position in gold for a bit via GLD calls. And so what do we want to do with gold? We still want to buy it. As gold pulls back, are we using the same trigger? That is a great question. Do we want to refire that previous trigger? Now, if we're talking previous trigger on GLD, we're talking about the 178 calls that we played before as the market sank into initially aggressively 178.5. Now that's going to coincide with what's going on GLD. I believe, James, that we're going to ratchet that up just a little bit, because where we were back on the, where we were back on the 22nd of March, making a low at 178.32. Look at that point of control, gang. Look at that level right there at 179.35. So, James, I have a feeling that point of control is going to absolutely be in play. As far as conservative and moderate levels, that's a good question. I have a feeling one of our conservative levels will probably be closer to 177.25. But let's see how this market progresses as we go into the end of the month. But we do want to be getting long on those pullbacks. And we're still managing, and in fairness, we're still managing the previous entry. And even with the pre-market sitting at 180.88, we're still just in an unrealized profit, right? We have our first target hit. We've moved to break even, and now we still have the luxury of just waiting to see how high is high. We're not quite low enough to do anything with another entry, but it's definitely on the radar. All right. Gwen asks, hey, good morning, Gwen. What are my thoughts on XLE, since it's one of the strongest sectors and looks ready for a pullback? I don't know if it looks ready for a more significant pullback, but interestingly enough, Gwen, notice how we're sitting at a really, really significant, probably the most significant other than the point of control. There's your volume ledge on the XLE right there. Gosh, gotta love that. That's a very interesting level. A little aggressive. I don't know that I'd be in any rush to be buying there, but at least it's a pullback that's reaching very, very closely to the 8 propulsion, the 8 exponential, 76.31, 76.35. That would be about as aggro as I'd be willing to get long XLE, the 8 exponential prop, right? That's the 3 and 8 exponential moving averages crossing and buying into that very shallow aggro dip. So that would be a level to watch. But what are my thoughts on this? So, when I have skin in the game, I'm going to let you all know. And we've had skin in this game in the mastery since the 16th, I believe. We did this back in February. So 224 was the February alert. And then in March, it was the 16th. So you can see 15, 16, we got long on this dip. So you can see that the quality of what it is, the characteristics of what it is that would even get me remotely interested in getting long, right? Those are the kind of zones that we're looking at. So the most aggro I could even think about being, and you know what you can do? Add an alert, right? Go figure out where that EMA is. To me, I'd put an alert around 70. Let's see. You can place an alert at 76.35. It's an alert at 76.35 as we're crossing down through that level. And just let your platform ping you, and you're going to remind yourself, oh, that's the 8 EMA aggro level. That is the way we do it. So that's what we're thinking about. Do I have enough of a pullback here to start a position of the quantity and quality of February and March's alerts in the mastery? I do not have that quality, but this is pretty darn good. It's the only thing that we've got, and it's at least a valid setup. In other words, we're not just making something up. We've got a 2 red dot setup that we can keep an eye on. So thanks for the question. Now, as far as relatedly, Exxon, number 1 weighted stock in the XLE, also a second red dot entry at the 8 EMA. And then your other question, other stock was ConocoPhillips, COP. There we go, COP. COP is nowhere near anything I can do with that, but we would have to pull back. Well, take a look. 98.80. 98.80 is where the point of control is right now. Great volume ledge, proximity to the wave, double green uptrend. What's not to like about a pullback of that quality? And again, it always feels like we're going to miss something. But as I like to remind everybody, Wall Street's the one place they throw a sale and nobody comes. I know what my sale price is, right? That is my sale price. And I wait. And that sale price may adjust higher or lower, right? Based on volume, based on price action that we see. But I will wait for it to go on sale. And it's uncanny how often it does. And it leaves us in a far less vulnerable position than if we were to buy at the highs, which I will not do. All right, next up, XLP is still looking weak. Thoughts on a Pepsi short? I think XLP is pretty choppy. I don't know that I'd call it weak. I don't know that I'd call it strong. It's above the 200, right? But it's below some Darvis levels, right, that we'd be watching. Okay. We're below the point of control. So it's a mixed bag, right? So I agree, Bart. What we want to do is start looking at boats within this tide. When I talk about relative outperformers, when I teach you all, and this is going to be part of the watch list conversation today at 2:00. So if questions like this, if knowing what to trade is where the wheels are coming off the wagon for you, you definitely want to join us at 2 in the mastery, because what we're going to do is, let me give you a glimpse into it. What do I know about XLP? Start with the structure. It's neutral. Okay. Then I'm going to ask myself, if I want to be short, there are candidates for that, right? So we want to start with the list. Notice I'm not jumping right to setups. If I want to be long, there's a candidate for that too, right? I even say Coke is in that vicinity. Take a look Altria is in that. I would even maybe add Walmart. Doesn't mean I'm going to buy those, but right away we're separating bullish from bearish. One of the most important things you can do when you're building a watch list is have different types of watch lists. Which stocks do I want to buy? Which stocks do I want to short? Because the same stock cannot exist on both lists, right? And so, do I like a Pepsi short? I think there are others I like better, right? So, Bart, the first question I ask myself when I start the conversation to trade anything is why that symbol? Why does that symbol have sort of why is it a front runner for my capital to be deployed? And I think when I go through the why, fill in the blank, whatever that symbol is, it forces me to look and focus on outperformance and outperformers. And if there's anything that has been working for us exceptionally well this year, it's not because we have a rising tide market where we can buy everything. It's not even because we have a sinking tide market where we can short everything. We have very choppy markets. And in chop, we all must become far, far better individual symbol pickers, right? We have to know what's the best example of a short, what's the best example of a buy, and then start to build our watch list out. So if what we trade is the precursor to productive trading, I feel that for me, success as a trader came when I spent more time figuring out what I was going to trade and the levels from which I was going to trade it than actually trading. The actual act of buying and selling should take up a very small amount of your time. Pareto principle applies. If you find yourself watch list building 20% of the time and trading 80% of the time, results are probably not going to be what you are capable of doing, right? And if you go 80 watch list building, 20 actually sending the trades out, which should almost be automated, alert driven. Hey, it's time to buy this call. Hey, it's time to buy this put type feeling. It should almost feel anticlimactic. Then you're on a really good path. You know, when people say trading should be unemotional, what does that even mean? That's what it means, that the actual getting into the market should not feel like the excitement of a bungee jump. And if it does, spend more time on the watch list building, right? Because then the entries feel more like a foregone conclusion that you've already sort of, as good athletes say, right? You've already envisioned the game. You've already envisioned the play. You've already envisioned your role. And then it just finally happens. You know, so you talk to a lot of performance coaches for sports. They sound a lot like performance coaches for trading. In fact, a lot of trading psychology came from sports psychology. And that's something that definitely works. You know, think about why Pepsi versus any of the other names on this layout. Okay. All right. So moving on to our next question. Great question, Bart. Line watcher, triple Qs. Sure. Why are we seeing strength in tech while bond yields rise? You know, we just are. I'm sure the folks on television, because they're all geniuses. They probably know. I do not. But you know what's interesting, Line Watcher? We've been trading around the noise. We ask ourselves, do I have to trade the broader average? Or can I go into an individual stock? Can I go into an individual sector? Can I go into another corner of the market that's related to tech, but has better bearish structure? And that's what we've been doing. And even that's been difficult. I will tell you, sometimes it's been great. Something like Nike has been, NKE was great to us. Cisco was really good to us. I believe Intel was really great to us. So what we did is we asked ourselves, kind of what I was mentioning to Bart, Line Watcher, why QQQ? Is there not something that could meet the criteria of my bearishness in tech in a better way? I have no exposure in QQQ. I do in other facets of tech. So as far as who's wrong, that's a terrific question. I would have to say, ultimately, it will be the equity players that are wrong. Not always, right? But if someone had to say, Rog, who's right and who's wrong? I'm usually going to say bond traders are going to be right versus equity. But they could be responding to two different catalysts in this market. Line Watcher, if we're feeling that stocks have already corrected, they're down 10% or more, that could attract flow into equity, right? But if we know we're going to see at least a half point, a quarter point hike to a half point hike, so at least a quarter on May the 4th to a half on May the 4th, what can bonds do but go lower? So here's the bottom line. They might be reacting to two different things. They don't have to be correlated. There doesn't have to be that causation, even though historically there often is. If after a significant correction, people feel that this is the time I want to pile into tech, that might be part of why we see what we're seeing, that there is a general consensus, not that it's right, but it does map out to behavior, that there's a general consensus that the bottom is in, right? So great question. I would usually bet on bond traders being right. But then again, the bond traders are reflecting what they're seeing in terms of the trajectory of rates, which we view through those target rate probability graphs that you see me using so often. So terrific, terrific question. Ian, oh, thanks. I love the bookshelf, working on mine. That's a good question, Ian. Gosh, that transformed my trading career, or not just, but my life. Oh gosh, Ian, so many. Huh. One thing that I would say, one book that I really like, and I'm looking at it right now, is The One Thing, without getting too esoteric, or really without being too much of a trading book. The One Thing, and I'm just looking back at what I have another bookshelf. There's a bookshelf over here. Y'all can see the bookshelf. There's another small one over here. Yeah, I'd have to say The One Thing. The One Thing. Because I have a very difficult time doing one thing. And so I have people around me that keep me focused on something, a one thing, but that's always something that I think is really, really difficult. And I think that was a big one. And then the checklist manifesto, right? Again, not going to anything really esoteric. The checklist manifesto was a really, really good one, checklist manifesto, because everything in life, that process of getting something done does tend to be a checklist. So I'd say, and those are two very short books, and yet you could probably reread both over the course of 2, 3, 4, 5, 6 months and get something different out of it every single time. So I'd say start there. Start there. Calwant asks, can I please give the best advice to start option trading and what time frame? 3 to 4 weeks. I'm doing part-time trading. So Calwant, I will tell you, the best advice when you're going to start options trading is focus on long calls and long puts, not complicated spreads, because everyone's going to say, well, options buyers don't win and spreads are how you win. And that's just not true. If you put on a poorly devised, executed spread, you're going to lose as much as someone who buys calls in a screaming uptrend and buys puts in a screaming downtrend. So focus on the timing of long calls, long puts, and that's the first thing I would recommend. And understand that your option trading should really mimic what you would be doing if you were actually buying or selling the underlying. A lot of options traders get lost in Greeks. Don't. They get lost in complicated Greeks and strategies, and they just forget that the underlying price action and volume is going to dictate a lot of what a stock does next, and therefore the value of the option. As far as part-time trading goes, I'm a big fan that less is more. And one of the things that even though we have our room open from 9:30 to 4 p.m. and Lorna and I are in the general chat with everybody throughout the week during trading hours, they'll see me chime in from time to time. Even though that's what some traders do, we're not trading all the time. It's really more about community and scanning and looking for new ideas. I really think that if you're looking at daily time frames and you're not doing some sort of hyperactive, complicated type of trading strategy, you can spend about an hour a day on your watch lists and your alerts and ultimately what your setups and entries are going to be. And that's the way we've designed what we do in the Sector Secrets Mastery. So I would start with long calls, long puts, and remember, less is more. No complicated spreads. Focus on the underlying structure of the market, and then ask yourself, if I was willing to buy the stock, would I just buy a call? If I wanted to short the stock, how about just buy a put? Start off that simple. Get the timing and the momentum aspect down, and you will find as you grow as an option trader, and eventually, if you want to be trading spreads, you're going to be so well prepared for that. And that's not just for Call Gang. That's for everybody. That's my advice for everybody. I have run way, way, way over. Thank you, as always, for being a part of Charts and Coffee. Well, today with Charts and Tea, a little white tea, charts and white tea. I'll see you all this afternoon. Well, I'll see my mastery members this afternoon, 2 p.m. Everyone else, I'll see you all for Charts and Coffee tomorrow. Caffeinate and dominate. And if you missed our Sunday show, it's over at the Simpler Trading YouTube channel. All right, we go live every Sunday night at 6 p.m. as the markets open, because Sunday nights, that is separation season, gang. That's where we separate ourselves from the folks that are just sort of having their first cup of coffee at 8, 8:30, 9 o'clock and getting ready for the market. We've been ready since 6 p.m. yesterday. That is separation season, gang. Be good to each other. I'll talk with you soon.